What's going on, everybody? Q here from Hyperstocks. Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over our watch list for the week ahead. This watch list includes names like Tesla, Google, NVDA, Apple, and AMD. We're going to give you all the levels of support and resistance that you need for these stocks. That way you know exactly where we plan on entering, where we plan on taking profits, and finally where we're going to place our stop losses. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that last week we made a fresh new 52-week high and also a fresh new high for all of 2023. Now this is very impressive, but it's not unexpected. We've been talking about the price target of 436 to 437 for the last few videos, and the way we figured that out was because of this red trend line that we drew on our charts. So notice, looking back at 2023, we can see that we have gotten rejected at that line multiple times, and each time sending us back lower. Now this time around, the market was trending up, and the only stop in its way was going to be that red trend line because that was the only clear resistance that we saw. So now that we've faced that point, or we are facing that point, many people are wondering, are we going to turn back down like we did here, here, and here, or are we going to continue our push higher? Now, some things have changed since these times. Inflation has come down. The Federal Reserve just stopped raising rates once again, and it looks like the bank turmoil is starting to cool down. So with all that being said, market greed is being driven back into the market, and people are starting to buy up stocks again. So it's looking like we're going to continue this trend up, and we'll talk about these levels in just a second. Before we jump into those levels, though, we have to talk about some of the events that we are expecting this week. The main event is going to be Powell's semi-annual monetary policy testimony before Congress. Now, anytime Powell speaks, volatility goes up, so we are expecting VIX to possibly rise. Now, VIX over the last few weeks has been coming down because implied volatility has been dropping on the market since we are recovering higher. But when Powell speaks, it typically does affect implied volatility, so be on the lookout. Option prices may be a little inflated this week because of Powell's semi-annual testimony. Another main event this week is going to be the PMI reading, or the Purchase Managers Index, and this index measures economic activity from the purchasing side of the manufacturers. Anything below 50 typically means that the economy is not in expansion mode, and anything above 50 means that the economy is in expansion mode. So as we go into this week, as we approach this Purchase Managers Index, just keep that in mind when you are positioning yourself in these stocks. So now let's move on and talk about SPY on the short-term candles, where we can see that SPY is currently trading in a very bullish trend. In fact, even if we were to break below 438.35, which is our support coming in from last week, we can fall all the way to 433.55 and still be in a healthy trend. The reason we took these numbers, or we got these numbers, is when we look at the shorter term candles, we can see that this is the point where SPY saw a major reversal last week. When we dipped down after the Federal Reserve kept rates the same, this is the point in which we bounced and we continued pushing since. Therefore, this is going to be our main support and focus. If we were to break below this point, it means all these buyers let go of their positions, and it can potentially take us down towards 427 to 428. Now, it is not unusual for markets to pull back. Even in the most bullish markets, pullbacks are completely normal. You just don't want us to break the trend. And for now, our trend is strongly bullish even through some pullbacks. So rely on these levels for now, and we can talk about some more net levels next week. Now, before we move on to our watch list, let's talk about SPY on one more time frame, and this is going to be the weekly time frame, where we're going to tell you our next 12-month price target for SPY. 12-month price target for SPY is going to be now between 480 and 500, and that is because this is the only trend line that is approaching for SPY as it breaks out higher. So we do expect there will be a lot of pullbacks, and the road up there likely won't be easy, but we are expecting the market to continuously go up over the next 12 months, and it will move towards our price target of 480 to 500. Now let's move on to our watch list, where we're going to start with AMD, and we're going to see that AMD last week, now we're looking at the weekly candles. Remember, we like to look at the macro picture, and then we zoom into the micro picture. So starting off with AMD on the weekly candles, we can see that there was a very strong pullback with very strong volume last week. AMD is still building what could be a bullish flag on this chart, but this strong pullback can send it back lower if the stock moves below certain supports that we're about to address. Now moving on to the daily candles, we can see that AMD is back at its 20-day moving average. Throughout this entire rally, the stock has done a phenomenal job at holding the 10-day moving average, but eventually when a stock moves a bit too far away from its 20 or 50-day moving averages, the market will automatically kind of correct it back down and people will start taking profits. But moving averages are places where buyers usually come in, which is an example right here. You can see that the stock dipped to the 100-day moving average and began moving up and started getting bought at the 10-day MA. So if you are bullish on the stock, watch the daily candles on the 10 and 20-day moving averages. If it can maintain the 20 and move its way back above the 10, then it can potentially rally higher. Here are some levels to focus on when you are looking at the stock on the shorter term charts. First of all, you want the stock back above the 126 level. This is just a pivot point. This is not a breakout point. This is a point in which the market rejected the stock so hard that if it was to break above that point, then it may have some relief buying. So if the stock moves above 126, you can begin a small position and place a stop loss just below that point, and it will likely continue moving its way up and try to move to test the 133.75, which would be your first price target and also the breakout target. If you want AMD to go anywhere, it needs to move above that 133.75 level, and that's because that was the highest point of rejection last week before the stock saw this very strong downside action. So the 133.75 resistance is the first breakout point, and the first price target above that level is going to be 136 to 137. We'll talk about some new price targets next week, so don't forget to subscribe. Now to the downside, we are seeing some trends that point that AMD may come down further, and if it does come down further, it has a support at 115.80 that buyers need to hold, and that is because that's where AMD formed its triple bottom pattern right here. So 3 times buyers came down to this point and decided they were going to push the stock. So if this time around it breaks below that point, that means these buyers are going out of the door. So they're no longer going to be there, and it will take the stock lower towards the 111 to 112 mark, which would be the first downside price target. The next stock on our watch list is going to be Apple. Now, Apple was a little hard to chart, to be honest with you, and I'm just going to go ahead and show you why. Let's go ahead and pull up Apple's chart, where we can see that Apple is moving in a very tight consolidation, and that's because the stock is at such an all-time high that buyers are too scared to get in. They've already gotten in all year, and sellers are definitely too afraid to bet against any stock right now. So Apple's movement is very choppy. It's slowly inching its way higher, but it's very, very choppy, which means that short-term option contracts are not going to work very well on this, because that slow, choppy movement is just going to drain your premium on the theta side, which is your time decay. So if you are trading Apple contracts, make sure you're giving yourself at least a month out on these contracts, especially if you're swinging them. Now, Apple's breakout is going to be at 187.50, which is a blue sky breakout, which means the stock is going to all-time highs. Now, just like we were talking about SPY's weekly candles, let's pull up Apple's weekly candles and look at what's happening overall. This is a very, very strong weekly chart. Relative strength is above 70, but we've mentioned this in videos before. Don't just look at the RSI as an overbought or oversold indicator. Look at the RSI as a relative strength indicator, which is exactly what the RSI stands for. So it measures the relative strength. If it's trading above 70, it means the stock has very strong relative strength. And the fact that the stock is breaking out above all-time highs while the market is just starting its rally, it could very much mean that Apple is setting up for that 200 mark. Now, I know we are day traders and we are swing traders, but we also have a group that's hyper wealth, and in hyper wealth we focus on these multi-week and multi-month positions. So if you are looking to take advantage of these multi-week positions, so you can take advantage of these 20-30% moves on these fundamentally strong stocks, make sure you check out the hyper wealth group. Now moving on to the next stock on our watch list, which is going to be NVDA, we can see that NVDA on the weekly candles is also showing very strong upside volume. Moving on to the daily candles, the stock just broke above its post-earnings consolidation. So remember, NVIDIA had a massive earnings jump, it consolidated and cooled down, and finally now it's starting to catch up again, and buying volume is not slowing down. So we do expect the stock to continue moving higher, and here are some levels that we are focused on. If you're looking to trade NVIDIA to the bullish side, then you are most healthy above 426.30, but the stock closed right at that point last week, so if it opens below it, it may need to fall to 420 before it starts reversing higher. The stock will need to break above 437.21 for it to continue pushing. Now, this is also a blue sky breakout, which means there is no true resistance above this point since it's an all-time high. If the stock does break above that point, we are expecting it to move towards 460 to 480 as our first price target, where we would start taking profits. If the stock fails at 420 and falls towards 413.30, then it could be in trouble and it may be sent back down towards 404 and even 395. Now, if it is going to the downside, we would not short this stock overnight. This would be strictly a day trade. Right now is not a market in which you would be holding puts overnight unless you are shorting another sector, for example like energy or the oil sector that is likely seeing a downside move while the tech sector is moving up. But right now you don't want to bet against tech, especially you don't want to bet against tech overnight. The next stock on our watch list is going to be Google. Now, Google is starting to finally gain some traction. However, the stock is still stuck in a consolidation mode. You know, Google's been on our watch list for a couple weeks now, and the stock was on our watch list before this big breakout. Since this big breakout, the stock is cooling down, which is completely fine and healthy, and you can see that all these buyers are not letting go of their positions. In fact, every time it dips lower, more buyers come in. So if you are looking for a move on Google, you're looking for a breakout above the 129.05 level. Yes, it can break above 126 and still be considered in a breakout zone, but it's truly not breaking out unless it moves above this point, which it got rejected at strongly on June 7th. So if the stock moves above 129.05, it would break above this consolidation point and it will rally towards its first price target of 133 to 134. We do have much more aggressive price targets on Google that we're going to talk about next week. Now, to the downside, if Google does fail and the market pulls back and the pullback takes Google with it, the stock is healthy up until 119.85. If it moves below the 119.85 point, which is right around here, then it can fall towards the 115 to 116 mark and even lower towards 113 to 114, which is right around its 50-day moving average. So the stock, if it fails at the 10 and 20-day moving averages, it will fall towards that 50-day moving average. Last but not least, the final stock on our watch list is going to be Tesla, one of the strongest names on the market right now, and on the weekly candles, we are expecting the stock to continue pushing higher. We will definitely be taking advantage of this stock in our Hyper Wealth group, so if you want to know our setup, make sure you check out the link in the description. Now, Tesla's volume has been extraordinary. We can see that the MACD is crossing up, relative strength is still healthy, and it's about to move above 70, which is a great sign. Now, let's talk about Tesla's short-term price targets. If you are bullish on Tesla, then you're going to need it to break above 264.88. We're not saying that Tesla is not currently bullish. It most definitely is, and it will remain as so as long as it trades above 250. But if the stock does pull back to 250 and break below that point, then it can potentially create a short or a put setup down towards 240 to 242. Below that point, it can begin filling the gap back down towards 235. Now, the downside is a long shot, but you never know what happens. The stock could definitely do whatever it wants to do. Make sure you're prepared for both sides. If you are playing the upside breakout, you need Tesla to break above 264.88 or around 265 for the stock to move to a price target of 274 to 276. Now, this is a very aggressive price target. We understand. However, Tesla is a very strong mover. So the moment it breaks out, a lot of buyers jump in, so the stock moves very easily. Don't forget that Jerome Powell does speak this week, so as we mentioned earlier, it's going to be a volatile week. So we'd just like to remind you that risk management is the only way you're going to survive on the market, so make sure you are positioning properly and you have appropriate stop losses that are fitting for your account and your risk tolerance. Thank you guys so much for checking in. Don't forget to subscribe and like.